everyone. Welcome to the Amberdata Podcast. I'm Director of Research Chris Martin, joined today with Ryan Rassmussen from Bitwise. Ryan, I am so excited to have you on today. We have so much to talk about, so many things to cover. Let's start out. I will botch your intro, so I would love if you can give us an intro of yourself. Give us a history of, tell us about yourself.
Yeah, of course. Well, first and foremost, thanks for having me on, Chris. Really excited to talk about everything we're going to cover today. As you mentioned, my name is Ryan Rassmussen. I'm the head of research at Bitwise Asset Management. We are a crypto specialist asset manager. We launched in 2017. We primarily have products that are serving financial advisors, hedge funds, and institutional investors, whether those be crypto index funds or the recently launched Bitcoin and Ethereum ETFs. So really, our role in the space is to help bridge traditional investors into the crypto space in a format and with vehicles that are familiar to them. We have a team of about 80 folks in the US, and also now we have Bitwise Europe, which we recently expanded to. And so we also have some products over there, more suited for European investors, a little bit more friendly of a regulatory environment over there, which is exciting. But we have a team of about 80 folks all day, every day. All we do is think about crypto and talk to traditional investors about investing in crypto. So it's an exciting intersection in the space, to me at least. And as I mentioned, I run the research team over here, focused largely on supporting our products and just educating investors on how to access crypto, which crypto assets to access, and all things that are Bitcoin, Ethereum, and every other crypto asset.
Yeah, how did you get into crypto? I know you have a really interesting history at Bitwise, starting from an research analyst, now head of research. What was that history like? And is this your first introduction into crypto?
Yeah, it's always fun to kind of go down that road of how you got into crypto. I love having those conversations. I got into crypto originally in 2017. My background is in traditional finance. So I worked in traditional asset management, broker dealers, and large asset managers before I got into crypto. I was on the corporate finance team over there, so doing mergers and acquisitions and financial planning and forecasting and analytics. But I got into crypto personally in 2017. I just had some friends who I'd gone to college with, who also studied finance, who were into crypto, and they kept kind of tugging on that interest for me. And so I finally, read some white papers, went in. Obviously, it was a bit more of the Wild West back then. And I believe the first crypto asset I bought was XRP, which was a wild ride up and then an equally wild ride down. And then, I continued to kind of chug along in traditional finance for a few years. But in 2019, I got really back into crypto, and the pandemic hit in 2020. And I'd already had that itch of maybe I should try to move into the space full time. And then I just spent all of my free time during COVID, walking around, listening to podcasts and talking with friends and kind of being on crypto Twitter, diving into DeFi, which was really the spark that told me, okay, this is different. This is going to change the way the financial industry fundamentally operates. And I'm working in traditional finance, and I need to be working on the cutting edge. So that was kind of my path into crypto. Was lucky to land at Bitwise in early 2021 as they were building out their research team. I was one of the first two research analyst hires on the team there. And, it's been a wild 3.5-year ride since then. The first year was really fun because everyone from family to friends to old coworkers were saying, hey, you're such a genius. How did you know this was going to happen? And then that was followed by a year of them asking if I was okay, doing wellness checks and seeing if I needed my old job back. And then here we are again, 3.5 years later. So it's been a wild ride. And I've only worked in crypto at Bitwise, but it's been really fun to see our company grow from kind of 20 people to a team of 80, and from less than $1 billion in assets under management to near $5 billion in assets under management.
Yeah, that's amazing. I love to hear about the wellness check. I think hopefully in a few years you get to give it back to them.
That's the goal. That's right.
Curious to hear about your perspective especially from an institutional standpoint. Have we seen the industry growing more recently? I know there's a lot of talk about institutions getting into the space. The ETF is a huge catalyst, in my opinion, on that happening. Are institutions joining the crypto space now, or have they always been here and we just aren't up to date?
It's a really good question. Certainly more institutions are joining the space now more than ever. And I think that's absolutely true. And I spent a lot of time traveling around the States with our distribution team, talking to prospective clients, prospective investors. And many, many times, especially I would say in the past 12 months or so, those are introductory meetings where they're just learning about crypto. They're interested in what is Bitcoin. Maybe clients are asking them about it, or maybe there's one or two people at these firms who is deep into crypto personally and is trying to kind of spread the crypto gospel to the rest of the firm. And so I think it's absolutely true that new institutions and new firms are getting into this space. However, like I said, we've been here since 2017, serving financial advisors, RIAs, hedge funds, family offices. So institutions have been here for many, many years. It's kind of a snowball effect where the early adopters are the smaller firms and the independent advisors who can fundamentally move faster because they're not part of these large organizations. It's like the small ships versus big ships turning slow analogy. And so there have been investors here, but it's been hard for them to access crypto. Many financial advisors or firms that I've mentioned aren't able to or weren't comfortable with accessing crypto on a centralized exchange or through a decentralized exchange because of compliance or security concerns. And so what we did in the space was offer first private placement products or products similar to what everyone knows as GBTC, these kind of over-the-counter traded trusts, but those are not effective or efficient vehicles for investors. And so over time, as more products that are more easily accessible and more efficient vehicles like ETFs come to market, you start to see more and more institutions get into this space. And certainly if you think about firms like Fidelity, who've been operating in space for a long time, they've been mining Bitcoin. A lot of strong crypto companies have been founded by people that were first part of Fidelity's digital asset kind of group and movement back in the day. But then you fast forward to today and you have Franklin Templeton and BlackRock and all these other financial firms that are getting into this space. I just think, without a doubt, we've seen more and more institutions entering, but some have been here and those early adopters have been rewarded.
Yeah. On the topic of the ETFs, I think I would be wasting everyone's time here if we didn't talk about it. I want to get your thoughts on that. Last year, around maybe December, we had a lot of hype. Crypto woke up from its slumber for the last 2 years. And Bitcoin ETFs were all of the rage, right? That was the major catalyst to wake up from the bear market and start a new bull market for crypto specifically. Then in maybe March, there was a lot of hype around the Ethereum ETF. The Ethereum ETF launched in July. Want to get your take on how that launch went, especially because there was a lot of mixed reviews on it just days prior to the launch, where people were either extremely bullish, saying that the Ethereum ETF is the next wave, to people saying the Ethereum ETFs were going to be a complete failure. How has this played out?
Yeah, I've spent more time in the past 18 months thinking about ETFs and learning about ETFs and talking about ETFs than I ever thought that I would in my career, particularly when I switched from traditional finance to crypto. But it's been a really exciting journey and a fun journey. And I think one thing that's important to note and that many people don't know about ETFs is that it's a multi-trillion dollar market here in the US. It's how most investors, whether they're retail investors trading in their 401ks or in their IRAs, or financial advisors that are investing on behalf of clients, most investors use ETFs. They use index fund ETFs, they use commodity ETFs, et cetera. And so I think that's important to note when you think about the success and really the reason why ETFs are so critically important to expanding the investable market for Bitcoin, for Ethereum, for other crypto assets. And so the Bitcoin launches in January were extremely exciting, right? It was kind of the first time we had a spot crypto ETF here in the US. Of course, they've existed abroad in Europe and in Canada, and the US regulatory environment and market has moved a little bit slower and been lagging. But starting this year in January, we had the launch of spot Bitcoin ETFs, and those have been the most successful ETF launches of all time. As a point of context, prior to the spot Bitcoin ETF launches, the most successful launch of all time was the NASDAQ ETF or the Qs ETF, which launched in 2005 and gathered 5 billion in assets under management in their first year, 5 billion in net flows in their first year. Now, fast forward to what the Bitcoin ETFs did. They've gathered more than 20 billion in new flows in their first year already. We're about 8 to 9 months out from those launches. Of course, barring some massive sell-off where we see tons of redemptions, I think we can successfully say that these were the most successful ETF launches of all time. Those were followed, as you mentioned, by the Ethereum ETF launches, which happened in July, and were really a surprise to almost everyone. I think, the likelihood of the spot Bitcoin ETFs being launched heading into 2024 was very high. And the likelihood of Ethereum ETFs, if you had asked anyone in the space or any of the issuers in the space, was very low. The likelihood was very low of the Ethereum ETFs being launched. And so it caught many people off guard, right? The SEC decided to approve the ETF starting in May. They started trading in July. And yes, it's been less successful than the Bitcoin ETF launches. I think on a net aggregate basis, we've actually seen outflows from the category. If you include the outflows from ETH, which was the grayscale ETF or trust that converted to the ETF, which, the inverse happened for Bitcoin. We saw all these Bitcoin ETFs launch and nothing but inflows, basically. It's not that surprising to me. I had this feeling and spoke about it with some colleagues and actually on some podcasts around. I think it's too early for Ethereum ETFs. And it would have been great to have a year or two of Bitcoin ETFs before Ethereum ETFs. Now that might seem strange to some people, but I'll explain why. Most investors who are buying ETFs outside of the crypto savvy retail community barely know what Bitcoin is. You can think about them allocating anywhere from 1 to 10% of their portfolio to crypto, and they don't have the time to spend, therefore, more than 1 to 10% of their time thinking about investments on crypto. And so they're still trying to learn what is Bitcoin. And as you know, and as many of the listeners probably know, it takes a long time to get up to speed on crypto. We've been in it for years. And so what is Bitcoin is a very boring question for us and very easy to explain. And same with what is Ethereum and what is Solana and the next 20 or 30 crypto assets. But for investors who are just thinking about this for the first time, or who spend 1% of their time every year thinking about Bitcoin, they really are still getting up to speed. And to introduce Ethereum into that equation is really just too much for them to digest, right? Many of these conversations I have when I travel around with our sales team and when I go to these more traditional finance conferences and summits, they're still focused on how does Bitcoin mining work? Can the government ban Bitcoin? Who's buying Bitcoin? And many of them, for better or worse, mispronounce Ethereum or Solana because they're just that unfamiliar with those crypto assets. And so to summarize, I'm not surprised that demand for Ethereum ETFs has been as low as it has. Many investors are still trying to get up to speed with Bitcoin. Of course, after Bitcoin, they'll start thinking about Ethereum. And once Ethereum becomes more mainstream, and once investors start to realize that Ethereum is this cash flow driven asset that looks and smells a lot like a traditional tech stock with cash flows and dividends and buybacks, then I think they'll start to see demand across the Ethereum ETF category. But I think we're a year out probably from that demand starting to lift because you first have to get through the wall of Bitcoin adoption before you get to the even knocking on the door of Ethereum adoption.
Yeah, there's so much there to unpack. I mean, I definitely get your point on a delayed Ethereum ETF. I think that makes a lot of sense. Do you think a staked Ethereum ETF would make sense? I think that would be a much more complicated subject to talk about, right?
Yeah, no, that's exactly right. Would a staked Ethereum ETF be great? Absolutely. I think us as crypto enthusiasts would love that. And in fact, in Europe, there are staked Ethereum ETFs. However, you could think about what we just spoke about, is explaining Bitcoin mining. Then you're explaining Ethereum. Now you're explaining what proof of stake is. Then you're explaining what staking is. And you can use analogies, right? You can say, look, this is like a preferred stock where certain holders, aka stakers, get a dividend from the cash flows that the blockchain network produces. And I do see the light bulb turn on when you tell investors about that. Of course, they ask, how do I access that? Can I access that through the ETFs? And we have to say, no, not in the US. So maybe that would help a little bit. But again, it's just further down the knowledge funnel for most of these investors who are just trying to get it up to speed and be able to answer the most basic questions around what crypto is and why it matters.
Yeah, how far are we from a stablecoin ETF on that note?
Oh man, I think that it'd be a great, money market fund on chain that could see a lot of adoption. Or, I wish, of course, at Bitwise we had launched a stablecoin back in the day. It's a great business model, particularly when
Absolutely.
interest rates are where they're at today. And so, maybe someday we'll see more adoption of money market funds that are taking some of the yield from stablecoin issuers or from the stablecoin model. But I think we're a ways away from more crypto ETFs. There's this precedent that has
Hmm.
been set by the SEC. It's not a legal requirement, but they've set this precedent where there has to be a regulated CME futures market. And so when you think about Solana, for example, there's a lot of excitement around whether there will be a Solana ETF coming in the near future, and there's active applications out for Solana ETFs, but there's not this regulated CME futures market for Solana like there was for Ethereum, like there was for Bitcoin. And if you kind of roll back the tape a little bit, the history for Bitcoin and Ethereum ETF adoption was first you had futures-based ETFs, then you had spot ETFs. And preceding both of those, you had regulated CME futures market. And there's no other crypto assets in the US that have either of those two prerequisites before the spot ETFs.
Yeah, that makes sense. I want to get back to that in a bit, but I'm going to try to think of a roundabout way to do that. When we think about like cohorts of customers or cohorts of users getting into ETFs or into crypto generally, are you seeing a different type of user or customer in terms of like early adopters of the ETF were, very knowledgeable in crypto? Now the conversations are more baseline education and trying to onboard people not familiar with crypto, or is there a different dynamic that we're not seeing?
Yeah, I think there's really three buckets that I would categorize people getting into crypto. There's the retail bucket, right, which is everyone from my parents or my siblings to those that are on crypto Twitter majority of the day, right? That's kind of this big retail bucket. Those have been a lot of the early adopters of these ETFs and obviously the early adopters of crypto. It's largely been a retail driven market. But I think what's most interesting when you think about that is only about 20% of wealth in America is driven by retail investors. The remaining 80% is broken into two other buckets. You have institutional investors and institutions that are investing in crypto. You can think of these as pensions and endowments and sovereigns. And then you have other types of institutional investors like financial advisors and RIAs. And so those each respectively control about 40% of wealth in America. You're talking trillions and tens of trillions of dollars. This is a huge amount of wealth that these two cohorts control. And they are very slow moving in most cases when it comes to crypto. Particularly the endowments and pensions are very slow moving. I was at an event probably now 3 or 4 months ago down in Orange County where we were with CIOs of endowments and pension funds and life insurance funds. And they're very risk averse. And particularly when interest rates are where they're at today and they can get a risk-free return up in the 5 or very low risk return up in the 5, 6, 7, 8% range, they have no desire to add crypto to their portfolio. Even a 1% allocation, if it falls for them, isn't worth what they would call the career risk of being early adopters. They mainly said, kind of had a candid conversation with them and asked, what is really holding you back? Say interest rates are lowered, right? We expect interest rates to be cut in the near future. What would that allow you to get into crypto? And they still said, we're not going to do it until we see others in the industry doing it. We're not going to do it until we see other CIOs of pension funds. Some even said they wouldn't do it until they saw something like the US start investing in Bitcoin in the strategic reserve. And so you think about that on the end of the slowest moving cohort. And then you have the more crypto savvy hedge funds, family offices, RIAs, who aren't part of those large institutions and kind of think more strategically about investing and like to build their own model portfolios and always have tech in their portfolios. And they perhaps are adopting crypto faster, but it's a multi-wave environment. And retail was this first wave. I think financial advisors, RIAs is the second wave, and then pensions and endowments and sovereigns the third wave. And I think we're multiple years out from that third wave.
Yeah, in terms of the first two waves, retail and the faster moving, smaller office type cohort, do we see them slowly moving on chain at some point, or are they going to be pretty much affixed to the traditional financial markets with ETFs? Are they
Yeah,
are they going into DEXs? Are they going into DeFi?
yeah, for the most part, no. Certainly not what I'm seeing right now. Of course, retail investors are primarily the users, and then crypto native firms are heavy users, right, of decentralized exchanges, whether they're LPing or trading or lending on lending protocols, right? Those are kind of the crypto native firms or crypto native retail investors. For example, I use DeFi protocols all the time, but many of my friends who invest in crypto as retail investors don't do that or wouldn't even know how to do that, and they use centralized exchanges like Coinbase or Gemini or Kraken. Most of the financial advisors and RAs that are in that second bucket we spoke about that can move a little bit faster are still sticking today with structured off-chain products. There's a few reasons for that. If you think about ETFs, for example, they're really easy to just fold into the workflow for these advisors, right? They're investing their clients' assets and they're kind of doing comprehensive wealth planning where they're planning for retirement and planning for college education or funding their child's college education and other types of wealth planning, buying a home. And they really need a comprehensive view of a crypto portfolio. And that's just really hard to do with on-chain products today. It's much easier for them to just pipe an ETF that they're using through their normal trading firm, whether it's Fidelity or Schwab or custodians, into that broader picture and get a comprehensive view of the portfolio. It also means that it's easier for them to bill on those assets, right? Financial advisors and asset managers, they're charging a percentage of the AUM as their revenue. That's how they get their revenue. And so they don't want assets sitting off chain outside of that billable umbrella. They want to bring it under the umbrella so they can charge on those assets. And so they have a holistic view of the entire portfolio when they're doing wealth planning. That's kind of two of the reasons why now we still see adoption only of structured products and off-chain products. I would say the third and fourth reasons are regulatory compliance. It's a very regulatory gray area if they take their funds and they go use a decentralized exchange or a DeFi lending protocol or even an on-chain stablecoin to earn some yield. And there's a hack or an exploit where the funds get lost through some custody arrangement that they fumble, right? They don't want to have that liability of being sued, or perhaps their compliance department won't even allow them to do that. And so there's just not enough clarity and not enough protection for them to move on chain. And then the fourth reason is tax reporting is much simpler with structured products. You can, you get the same kind of tax reporting with an ETF as you do with a stock or with the S&P 500. And so I think those are four reasons why we haven't yet seen, and we probably won't for a while, see adoption on chain. Now, if you fix some of those problems, if we figure out how to clear up the regulatory gray area and some of these custody solutions to go on chain, then if we have stablecoin legislation and we have the ability to maybe use some kind of KYC or white labeled on-chain lending market to earn yield, perhaps. But I still think there's this kind of wall that will exist for the foreseeable future that keeps many institutional investors off chain because of the regulatory hurdle, because of the tax hurdle, because of the security and custody burden, and because it doesn't fit within the broader comprehensive wealth planning.
Yeah, absolutely. I definitely agree. I think the industry is, in a macro perspective, a little bit immature in regards to custody, in regards to security. I mean, exploits are a massive trend right now. Um,
Mm-hmm.
I, even as a native crypto user, I have my own concerns when making a transaction with my ledger, right? It's
Mm-hmm.
there's always some area for improvement. Now, if we kind of merge this conversation of customers with the previous conversation on traditional markets, do you think that we are much more tied to financial markets now than we have ever been before? Let's say August, for example, is generally a slow month in terms of financial markets in the equities market. Uh, we also saw the same thing in crypto this last month. Everything was fairly slow. Spot trading was fairly low. Lending, borrowing was fairly low. Are we as an industry more connected to the financial markets than we have been before? Or, is this a coincidence?
Yeah, I think you're certainly right. There's been a seasonality effect that not only affects traditional markets, but started to affect crypto. There's a common popular saying in traditional finance: sell in May and go away, right? And that's because it's just human to take the summer off, particularly in the States, but in most countries, you see people kind of taking the summer off, checking out, right? Maybe their kids are on summer break, or they've built up some vacation that they want to go take and travel. And so when that happens, there's just not as much liquidity engaged in these markets. There's not as many traders. There's not as many investors. There's not people making allocations. And I think that's true, certainly for traditional markets. And I think that's also true for crypto markets. I know myself, for example, I take vacation in the summertime. I don't bring my ledgers necessarily like with me and or I'm not like necessarily trading in those moments. And so certainly history would say that August and September are really slow months for equities and for Bitcoin. There's a really interesting chart that I was looking at recently that showed that, when you average out returns by month over the past 10 years, the returns of Bitcoin in August and September are the two red months, right? So that sell in May, go away, come back at the end of September or early October really does hold true for crypto. I do think we're tied to traditional markets a little bit. Certainly we'll see, more price action affecting Bitcoin from the ETFs than we did before ETFs. But still, these are really deep and heavily liquid markets. Bitcoin trades tens of billions of dollars a day. And I think we're just as tied to traditional markets as we are to macro factors. And I certainly think that's increased now more than it has 2, 3, 4 years ago. And so whether it's interest rates, whether it's traditional seasonality or some other factor that affects both macro traditional markets and crypto markets, I do think that crypto is a little bit more tied. Now, one of the benefits of crypto is that historically it's been uncorrelated to traditional equities. Bitcoin's had a low correlation to the S&P 500, right? And that's really important to investors because they can add that to their portfolio without increasing the volatility or getting some of the diversification effect. And so I still believe we'll be uncorrelated. Have a lower correlation to traditional markets moving forward as we have historically. But certainly those macro factors and traditional market factors are impacting Bitcoin a little bit.
Yeah, great. I want to pivot the conversation a bit to something a little bit fun. I remember at the end of last year, you posted top 10 predictions for 2024 on Twitter. At the time, it was called Twitter. Now it's X. We are over halfway in the year. We are about to enter Q4. I want to get your sense of, are some of these predictions true? Did we miss the ball, or are they yet to play out? So let's read off a few of these. Bitcoin over 80K. Now I believe we're just around 60, if I'm not mistaken. Coinbase doubling in revenue from 2.85 billion to 5.69 billion. In Q1, Q2, we've already hit revenues of 5.8 billion. So that one seems to have been true. JP Morgan tokenizing funds, Taylor Swift NFTs, AI assistants using crypto, and prediction markets. So one more, actually. Quarter of financial advisors allocating crypto to their clients.
Yes.
I don't know, do you want to tackle these one by one or just in general? How are things playing out?
This is fun. Let's do it. Let's tackle them one by one. The first prediction that Bitcoin would hit a new all-time high, or would it burst through previous all-time highs and set a new all-time high above 80K. There's moments this year where that felt like a bearish prediction. Certainly when we breached all-time highs and traded around 74K. We've retreated today. I think we're somewhere around the 55, 56K mark. I certainly still believe that this will happen in Q4. I think we have this really interesting kind of series of events that are playing out that if they play out in the right way, we'll certainly see a big boost to risk assets. And Bitcoin, of course, is a risk on asset. And the expectations of the Fed are going to start cutting interest rates, right? That should be a positive tailwind for risk on assets like Bitcoin. I think we're starting to see renewed adoption of Bitcoin ETFs in Q4, partly from people coming back from this summer break that we spoke about when we talked about seasonality, but also because these larger firms, these large wirehouses and RAs that take many, many months to analyze new products they allow their investors to invest in, they allow clients to be allocated to. These are the Morgan Stanleys, the Merrill Lynches of the world. They are just starting to get through that approval process now. I think Morgan Stanley just began allowing their wealth managers to start allocating to crypto, but the big banks like Bank of America, for example, JP Morgan, they're not necessarily able to allocate to crypto yet. And so I think we'll see that wave start to happen in Q4. I think we could have some positive regulatory certainty coming out of the election. Of course, if Donald Trump wins and he's labeled himself the Bitcoin candidate and has this 10-point plan for how the US will be the crypto capital of the world, I think if those things happen, if interest rates come down, we'll certainly see Bitcoin surge past 80K. I would say maybe even 100K.
Yeah, that would be amazing. Do you think that 100K is bearish, or is 100K fairly median in terms of prediction?
Yeah, I think it's fairly median. Look, we're nowhere near Michael Saylor's multi-million per Bitcoin in 20 30 projections. I think his projection was somewhere around 40 to 50 million per Bitcoin. Like that's extremely bullish. I will say that most of the projections that we saw when we put this out there was anywhere from 100 to 250K. I think that means that we're on the lower end of that, and it's somewhat conservative, but that's about a 2x from where we're at today. I certainly don't think that's unreasonable if those series of events that I laid out are happen to occur. And so I would say 100K is bullish from where we're at today. I don't really foresee us hitting 200, 250K by the end of 2024. Is that possible in 12 to 18 months? Perhaps, but I don't think by the end of 2024, when we only have about 4 months left of trading, that it's likely that we get much higher than that.
Yeah, that makes sense. And especially if the listeners of this podcast all go out and buy Bitcoin, I think we'll be even closer.
Just not financial advice.
Yeah, exactly. The second one, Coinbase doubling revenue, that one's been done. Do you think that Q3, Q4 are going to be just as favorable for the exchange as Q1 and Q2, or is there a
Yeah.
lot of up in the air?
Look, it's hard to find someone more bullish on Coinbase than me. So I will caveat this optimistic answer with that disclosure. Coinbase is such an interesting business, and to me, has its tentacles. When I look at Coinbase, it has a tentacle into almost every facet of the crypto market, whether that's their partnership with with USDC and Circle. So they have a line item into stablecoins. They offer staking services. So they have a line item into staking, not just Ethereum or Solana, but many other crypto assets. They're the custodian for the Bitcoin and Ethereum ETFs for many of those. So they have a line item into custody, not just for the ETFs, but for many institutional investors. They're the custodian partner. They have a derivatives market. They have a spot trading market. Their Coinbase Ventures is a prolific venture capital firm across crypto. It has, I think, over 400 investments in different crypto projects. And those, I'm sure I'm missing some of their lines of business when I recap this. And so just covering all of that, I think that they're in a really strong place, and they are really perhaps one of the best set up companies for the future growth potential of the industry. I guess rolling back to answer your question specifically, do I think the second half of the year will be as successful for them as the first half? If we have a renewed bull market in Q4, certainly I think Q4 will be really strong. I think Q3 probably won't be as strong. AUM has come down, so their management fees have lowered. Spot volumes have come down, so their trading revenues have lowered. I think we've seen a little bit of growth in USDC, so perhaps some of that will be offset, but I don't think it'll be enough to offset the slowdown we've seen in other line items. But still very happy with this prediction and believe that Coinbase, this one will come true around Coinbase doubling its revenue. I just think one more point on that before we move on to the next one is that when we looked at Wall Street's expectations for Coinbase last year, the consensus estimate was that revenue was going to be anywhere from flat to 10% growth year over year. And that was coming out of 2023 with the likelihood of Bitcoin ETFs at above 90% from Bloomberg ETF analysts, and with all the other catalysts that we expected to happen this year, lowered interest rates, positive regulatory legislation, or probably positive regulatory conversations and movement, which all kind of played out. And so I think that Wall Street just doesn't fundamentally understand Coinbase, and that's perhaps why I'm so bullish on the future outlook for the company.
Yeah, I would completely agree with you. Wall Street has no idea what they're seeing. Like you said, ventures, probably one of their most underrated assets is ventures. So many of their bets are successes already. They've been early investors into some of the biggest protocols out there, and they continue to invest in some of the most successful ones right now, like Velodrome, for example. And then even Base Chain.
I mean, Base is it's already generating tens of millions in revenue for them annually, and that's just going to grow. Base is one of the fastest growing L2s, if not the fastest growing L2 this year. I think one other really interesting fact around Coinbase that many people don't understand or aren't familiar with, which is fair, is that Coinbase is, in my view, a tech company, not necessarily a financial services company. I view it as a tech company. It actually is not part of and can't be part of the NASDAQ, which is the largest tech index, because they exclude financial services companies. And to Wall Street, they view Coinbase as a financial services industry. And so I just think fundamentally that shows how much the Wall Street just misunderstands and really doesn't get Coinbase's business model. And I think that creates a lot of opportunity for those of us that do.
That's interesting. I have always considered Coinbase as a financial institution myself. Having worked at Coinbase, I've always had that lens. I can see the lens of a tech company, but I feel like we're going to start carving out an entire niche. We, as in the investor market, are starting to carve out this new niche of Web3 or even crypto centric, blockchain centric companies. And that's
Hmm.
an entirely new industry. I mean, if you have somebody from tech joining from, like, let's say your Facebook, your Google, joining into Coinbase, the amount of information they're going to need to learn is just such a high bar.
Hmm.
It's a completely different knowledge set. So I think it's interesting that you consider it a tech company. I don't entirely disagree, but I see it as its own standalone thing. Even kind of MicroStrategy almost falls into that.
Yeah, interesting, right? MicroStrategy
Yeah,
is an AI business intelligence company, but I think everyone that I speak to knows them from their Bitcoin purchases. So it is really interesting to see how everyone views these companies through different lenses, and I think that creates a lot of opportunity and a lot of asymmetry possibilities there.
yeah, absolutely. JP Morgan tokenizing funds. How's that going?
JP Morgan is such a interesting has such an interesting love-hate relationship with the crypto market. On the one hand, you have Jamie Dimon, who often talks about how crypto is worthless and all these negative things. And then you have Onyx, which is JP Morgan's crypto group, which has hundreds of employees and is building various crypto products. And so will they tokenize a fund and launch it on chain this year? About 3 months ago, I was probably more bullish on this. I think that this one probably has a less than 50% chance of occurring. I will caveat that we should have said BlackRock, and we would have been right because BlackRock did launch
Absolutely.
an on-chain
Yeah.
fund earlier this year.
Yeah, I was reading. I was reading through these predictions, and I laughed at that one JP Morgan, because I was
Yep,
like, yeah, they're launching their own blockchain. But
exactly.
yeah, the public information that Jamie Dimon is selling, I have a feeling that he's really just suppressing prices until he gets a large enough bag. We'll
Yeah,
see how that plays out.
we talked about stable coins earlier. I think JP Morgan will launch its own stable coin. And so I think that just goes
Absolutely.
to show like how different the public discourse for Jamie Dimon is versus probably what's going on behind the scenes. I don't have any information on that. It's just a feeling that I have.
Yeah, I think we could spend an hour and a half talking about
Hmm.
stablecoins easily. Taylor Swift NFTs. Is she on
Uh,
board?
this is also a funny one. This was a high debate across the Bitwise team, and I don't think this one is going to come true, but it's a fun thought exercise if the biggest pop star in the world did launch NFTs. And why I think this is still possible and likely in the future, just not in 2024, is that Taylor Swift has always had a unique view on how to connect with her fans. And I think that she would be a prime candidate, not just because of her reach, but because of her constant attitude of connecting with fans in unique ways. I think NFTs create a really, really interesting way for her to connect with fans. And I also think she has, it's clear that she has one of the strongest fan bases of any pop star in the world or any artist in the world. And the intersection of those two things makes me very bullish on a world where she does launch NFTs and how that kind of changes the public perception of NFTs from these are, monkey JPEGs that scammers launch to this is something that, Taylor Swift, who cares more about her brand than most artists and who has more innovative approach to engaging with fans than most artists. And I think that would be a really interesting paradigm shift and powerful paradigm shift for the outside world's view of NFTs.
Yeah, I think pop culture is slowly coming around. I mean, Iggy Azalea launched the Mother token
That's right.
sometime this year. Uh, did not go as well as I hoped, but I think one of the things, this is a hot take, a personal hot take of mine. One of the reasons Taylor Swift has not joined the NFT group yet, or a token group yet, is that Donald Trump did it first.
That could be. That could be.
Yeah,
I don't.
I think,
That's probably not that hot of a take if you start to peel it back. I think that might have some legs to it.
yeah. AI assistants using crypto.
This happened.
Oh,
This happened. Very excited about this. Now, is it happening at a rate we expect? We hoped it would this year. No, but I think last week Coinbase announced that they had conducted an AI to AI payment, and I think AI agents or autonomous AI agents can't own bank accounts, but they can own crypto wallets, and so I think it just makes sense that crypto is the currency of AI going forward in the future and is used to carry out just remedial fundamental tasks. Hey, I need to place this order for paper towels that I ran out of paper towels, and my AI assistant has access to a crypto wallet that has $300 of USDC. I'm not going to give them access to my bank account. Obviously, that's a little scary for people today, but can I give them access to a wallet or a multi-sig that has $300 in it that I just top up, once a month? Sure. And then they can go and, buy a gift for a friend for their birthday, or send a card, for to my parents for their anniversary or something like that, and pay for it using crypto. I think that makes a lot of sense.
Mhm. Just two more. One of them we've already touched upon during the podcast already. Quarter of financial advisors allocating crypto to their clients. Do you think we're at the quarter mark? Are we close?
We are close, but I don't think we'll get there. We were somewhere around 10% at the beginning of the year. We run a survey every year for the past 5 years of financial advisors and their attitude towards crypto. Around, I think it was 9% going into 2024, we're allocating to crypto on client accounts. I think that will probably be somewhere around 15 to 20% this year. Now, obviously, this is somewhat self-selection bias, because the people that are answering this survey clearly are self-selected into crypto. But on a relative basis from prior years, since we have 5 years of history, that needle moving from 9% to 15 or 20%, I think shows where we're headed. And so I don't think we'll have a quarter of financial advisors allocating to crypto, but I think we'll have somewhere around 15 to 20%.
Yeah. Okay. That's still a huge number,
It's
honestly.
a big number. They control a lot of money in America.
Yeah, absolutely. Last one, prediction markets. You predicted $100 million locked in prediction markets. How is that looking? I have the answer right in front of me. I just want to gauge where you think we're at.
Look, Chris, I love prediction markets. They are probably the most fascinating thing to me in crypto right now. I've spent the past week going down a poly market rabbit hole just because I was like, oh, I just need to spend more time on this because it's so fascinating to me. So this is a prediction that was far too bearish. We should have said a billion instead of 100 million, but I'm really excited about prediction markets. There's some really fun facts about them, like they've existed, obviously not on a technology standpoint, but prediction markets have been around for over 100 years. And particularly election-based prediction markets have always had a lot of interest from the public. And I think the election year, combined with easier user experience to use things like Polymarket, has led to a huge boost in their adoption. I think it's one of the killer apps for crypto, certainly.
Yeah, absolutely. Polymarket, by the way, $107 million locked as of today. And this is just one of the prediction markets. You've blown away this prediction. Um,
I love it. I love it. Love to end on that one. Yeah.
yeah, huge fan. All right, last question for you before we wrap up. What is one thing that we, the crypto community, crypto enthusiasts, aren't talking enough about, but we should be?
That's a really good question. I think that the thing that the crypto community is not talking about enough that it should be is having realistic expectations. I think it's easy as a crypto enthusiast, as someone that spends every single day of the week, and even on weekends, I'm on crypto Twitter and I'm playing with crypto applications. It's very easy for me to get over my skis and think like the rest of the world is going to be doing this any day. They're going to be doing it tomorrow. I think it's really important. And what I often have to kind of reground myself in is most of the people in the world today just don't care about crypto. I've worked in crypto for 3.5 years, talked about crypto all the time to my parents. Talked about Ethereum to my dad recently when I saw him, and he acted like he had never heard it before and said it sounds like the name of a drug. Like that is the public perception of crypto. And so I think it's really important to realize that, should have realistic expectations. And instead of attacking traditional investors for not having allocated soon enough, I think we should embrace the fact that they're just starting to scratch the tip of the iceberg, and that it's going to be a many-year journey. And the ETFs are just one of the gates that we've now opened to allow that journey kind of to flow more seamlessly, but it's still going to flow very, very, very slow. And just having realistic expectations and understanding that these investors really are spending less than 1% of their time thinking about crypto, while we're spending 70, 80, 90% of our time thinking about crypto. I think that's one thing. I would just throw in another thing is that there needs to be more killer apps. We spend so much time on the infrastructure layer, and I know especially in my Twitter feed, I see like nonstop discussions around infrastructure layers, layer twos, different types of scaling solutions, like why Solana versus Ethereum, vice versa. Most people don't care about those things at all. They want to know, most of the time I get these questions, what are the killer apps for crypto? I'm so happy that now I can reference prediction markets beyond just stablecoins. I think we now have 2 killer apps for crypto that have entered the market and showed their staying power over one. But I just think that there's not enough time spent on what are the real fundamental world-changing use cases that crypto is bringing, rather than debating which L2 sequencer is more decentralized or something like that.
That's amazing. I completely agree with you. A lot of the times people don't even know or care about what's the underlying technology. Uh, I can't agree with you more. Ryan, we are out of time. I really appreciate you staying on with me and chatting through everything ETF, everything predictions. Thank you so much. I know we have another 3-4 hours of content here that we could talk about, but
Yes.
we'll end it now. Thanks
Yeah.
again.
Thank you, Chris. Really appreciate being here. Would love to come back and chat about all these things. Thank you for having me.